Hi, Steve Nissen here, president of Candlecharts.com, and as promised, here's your free video bonus revealing my all-time, drum roll please, most important trading rule. And I'm going to kind of segue into that with this testimonial we got from Guy, and he's mentioned, as shown here, he sold a confirmed bearish engulfing pattern. And one of the things that we discuss in our more detailed educational resources is the importance of confirming a candlestick signal like a bearish engulfing pattern with a Western signal. But Guy had a bearish engulfing pattern confirmed with a Western signal. Not sure which one he looked at, but this combination of East and West is very significant. But this is the aspect we want to talk about now, with a risk-reward of 3 to 1. And actually, it should have been a reward to risk of 3 to 1. And what Guy means by this is that he had a profit potential, in other words, your potential reward, of 3 times the amount of the risk. So if you were willing to risk $1, your profit potential should be $3 to have a reward risk of 3 to 1. And that is actually the core of one of my most important, or if not the most important trading rules, this aspect of always looking at the risk reward before placing a trade. Let me show you an example of this. Now, just to refresh your memory, we have engulfing patterns. A bullish engulfing pattern is when a white candle, remember a white candle is when we have the opening at the bottom of the real body and the close at the top, wrapping around a black real body. Just to refresh your memory, a black real body means the opening is there and the closing is there. This little bit of an upper shadow means the high is up there. So this comes after a downtrend, as shown by the red arrow. The bulls, and this is what's great about the candles, the visual depiction of who's winning control of the market between the bulls and the bears. So the bulls are taking over from the bears in the bullish engulfing pattern, a potential bottom reversal signal. Now, the flip side is a bearish engulfing pattern. The market is ascending, a black real body wrapping around the white real body, the bears are taking over. Now, one of our cardinal rules and one of the greatest misuses of candles is many traders get so excited that they recognize a candle signal that they buy or sell on every candle signal. And that's the best way to get burnt with candles. And that's why we emphasize the importance of having the full knowledge, not just limited knowledge, about how to use candles. And we'll go over how to get that information a little bit later. But let me go over the importance of risk-reward in the context of looking at candle patterns. So here we have, and this happens to be an intraday chart, but just to refresh your memory, all the strategies we reveal about candlesticks can be used in all time frames. So here we have a bearish engulfing pattern, 1, okay, the black real body wrapping around the white real body, and another bearish engulfing pattern at 2. Now, normally, we would say if we were looking at candles in isolation, which you should never do, but if you were looking at candles in isolation, you'd say, wow, look at that black real body many, many more times than the prior white real body, so I'd be more negative on this, and this looks like a greater selling opportunity as opposed to this. Okay, here it's a black real body, but it's only a little bit bigger than the white real body. Which is more negative? Instinctively, we might say the bearish engulfing pattern too. But let's look at this from the risk-reward perspective. So, with the bearish engulfing pattern at 1, okay, many of the candle signals, not all of them, but many of the candle signals you should use as a stop-out level. So if you happen to be selling short here or doing a bearish option trade, okay, that is your stop-out level. And my target would be that support area, okay, that we had before this bearish engulfing pattern. So the lows here and the low here, and just made some horizontal lines, so that gives potential support in this zone here. And notice how the sell-off from the bearish engulfing pattern indeed held that support area. But the point is, with the bearish engulfing pattern at 1, that is an attractive risk reward. Now, let's look at bearish engulfing pattern 2. Okay, by the way, if you did this trade, you could have made $2,400, over $2,400 on pattern 1, on the first pattern. So, again, correctly using the candles can really help put money in your pockets. Now, here's our stop at candle pattern 2, the bearish engulfing pattern. This is the stop out level. And let's think about our price target. Remember, to get risk reward, you need the risk, the stop out level, and reward, in other words, the potential price target. And what I'd be looking at is the lows that we had here, and maybe over here. This is a bullish engulfing pattern, by the way. So this to me would be a potential support zone. Now let's think about this from a risk-reward perspective. Is the bearish engulfing pattern, remember, the pattern is completed on the close. So if you're thinking about selling, again, a bearish option trade or selling short, here would be your initial price you would do it at because you have to wait for a close. This would be the target, and that's your risk. Does that look like a good risk reward? Obviously not. So that is a trade you should not be taking. And actually, this is what happened after. See, that's the black real body, long black real body, and notice how it held that support area. So, yes, you would have met the target, but this is your risk. So the risk was multiple times the size of the potential target, so it's a trade you should have stayed away from. Again, this is the importance of understanding the concept, not of just recognizing the candle signals, but what do you do with them. And so, for example, here we have a nice hammer. The hammer is a very long lower shadow, twice the height of the real body, small real body at the top end of the trading range, black or white real body, and the low of the hammer becomes support. So if you're long, that's your stop out level. And where's a target here? Where would you look for target? Well, I would be looking at the pivotal resistance area set by the highs here and the highs here. By the way, this is not a bearish engulfing pattern. It is a pattern related to a bearish engulfing pattern called the dark cloud cover, when the black candle gets deeply into the white candle, but doesn't quite wrap around it. Again, the bears are grabbing control of the market from the bulls. So, do you think this is a good risk reward? If you buy it here, your stop is here, and your target, again, your target might be different, okay? But I use the recent major highs. Your target is here. Is that a good risk reward? And the answer is yes. And indeed, that would have been a great trade. So the idea is, one, being able to recognize the candlestick signals, and then correctly recognizing it, because most of the people who use candles are not correctly recognize them. But then more importantly, what do you do with the candle signal? Do you buy? Do you sell? Do you stand aside? And that is what correctly using the tools is all about. I have a simple formula that says knowledge equals confidence equals success. And on the next page, you're going to see more educational resources to take you up to the next level of knowledge. So thanks for joining me, and may the candles continue lighting your path to greater profits.